Very, very good morning to all of you, my friends. Welcome back. I hope you guys are doing good. Further, I hope you guys were able to solve questions on standard costing. I have taken 4 sessions on standard costing. And as much as possible, I discussed, many practical questions. So I hope you guys are thorough with the concepts. So now, today, we are starting with one more chapter. Again, a very, very important chapter from examination point of view, just like standard costing. So, we'll be starting today with a new chapter that is marginal costing. Very important chapter from examination point of view, from practical point of for practical purpose also. This chapter is very, very important. Now, again, when talking about marginal costing, it has nothing to do with cost calculation. Standard costing, marginal costing, these two chapters has nothing to do with cost calculation. They are a part of management accounting, and it's an essential tool or an important tool for management decision making. So again, marginal costing, also it's a part of management accounting. And it assists management in decision making. Again, the weightages, we can say 10 to 12 marks of this chapter. The weightage of this chapter is approx 10 to 12 marks. Good morning, Nancy. Good morning, everyone. So the weightage of this chapter is 10 to 12 marks. And again, in practical life also, this chapter is very, very important. Now, before starting with this chapter, let me discuss few terminologies and then we'll be starting with this chapter. So good morning, Hardik. Good morning, Dev Kumar. Good morning, everyone. Good morning, Neeru. Good morning, Prakriti. Good morning, Sai Kiran Kumar. Good morning, Aisha. So let's start with few terms. The first term is marginal cost. When talking about marginal cost, what is marginal cost? The cost of producing additional unit. What is marginal cost? The cost of manufacturing additional unit. The cost of manufacturing one additional unit is what we call as marginal cost. Let's say I manufactured 10 units and the cost is 100. Let's say I manufactured 10 units and the cost is 100. Now let's say if I manufacture 11 units, the cost goes to 110. So here with additional 1 unit, the cost goes up by 10 rupees. So this rupees 10 is what my marginal cost. I repeat again, guys. When talking about marginal cost, it's the cost of manufacturing additional units. So let's say if I'm manufacturing 10 units and the cost is 100. Now, if I manufacture in 11 units, if the cost is 110, then what is the extra cost of producing 1 unit? Rupees 10. So that is what my marginal cost. Another example, let's say I'm manufacturing units, and let's say if I manufacture 10 units and the cost is, let's say if I manufacture 100 units and the cost is 1000. Now, if I manufacture 100 first unit and the cost is, let's say 1050. एक यूनिट हमने एक्स्ट्रा बनाया और उसका कितना लगा है 50 rupees. So in this case also, this rupees 50 is what my margin. So when talking about marginal cost, what is marginal cost? The cost of producing additional unit. Now the next concept what I want to do is discuss is variable cost. The next concept what I want to discuss is variable cost. When talking about variable cost, what is variable cost? The cost that varies according to production. The cost that varies according to production is variable cost. The cost that varies according to प्रोडक्शन. ये वो कॉस्ट है जो प्रोडक्शन के हिसाब से वेरी करता है. Let's say if I'm manufacturing 10 units and the cost is 100. If I'm manufacturing 500 units, the cost will be 5,000. If I'm manufacturing 60,000 units, the cost will be 6 lakh. If I'm manufacturing 0 units, the cost will be 0. So ये वो cost है जो production के proportion में बढ़ता है. If the production is increasing, this cost will increase. The production is reducing, the cost will reduce. And if there is no production, then no variable cost. When talking about the examples of variable cost, the best example we can say it is raw material. Further, it can be labor and all the variable overhead. So let's say I'm the manufacturer of a shirt and every shirt requires 2 meters. Every shirt requires 2 meters. If I'm producing 1,000, if I'm manufacturing 1,000 shirts, how many meters will be required? 2,000. If I'm manufacturing 5,000 shirts, how many meters will be required? 10,000 meters. If I'm manufacturing 20,000 shirts, how much meters will be required? 40,000 meters. And if I'm not manufacturing any shirt, zero shirt, then no raw material will be required. So again, we can say raw material is the best example of variable cost. Thereafter, we can say labor cost and all the variable overheads. So marginal cost, the cost of manufacturing additional unit. Variable cost, the cost that varies according to production. When talking about the example, it is raw material, labor, and all the variable overheads. Now the next concept is fixed cost. When talking about fixed cost, what is fixed cost? The cost that remain fixed irrespective of production. What is fixed cost? The cost that remain fixed irrespective of आप कितने भी यूनिट्स मैन्युफैक्चर करो, दिस कॉस्ट विल नॉट चेंज. So that is what we call as fixed cost. One second. So ये वो cost है that remain fixed irrespective of production. Let's say I'm the manufacturing 10 units and the cost is 1,50,000. Now, if I manufacture 1,000 units also, the cost will remain 1,50,000. If I manufacture 6 lakh units also, the cost will remain 1,50,000. And if I manufacture 0 unit, very important guys, if I manufacture 0 units also, the cost remain 1,50,000. So the cost that remain fixed irrespective of production. When talking about the example of fixed cost, let's say I'm the manufacturer of shirt, and to manufacture shirt, I have taken a premise on rent, and let's say I'm paying a rent of rupees 30,000 a month. Now, very important guys, if I manufacture one shirt also, I have to pay 30,000 rent. If I'm manufacturing lakhs of shirts also, I have to pay 30,000. So irrespective of the production, the landlord is going to ask me every month, last date, 30,000 rupees. So this rent is what? Fixed cost. Irrespective of production, I have to pay a fixed rent of 30,000. So when talking about the examples of fixed cost, we can say rent, salaries, what we are paying to accountants, then depreciation, insurance premium, etc. So for the students who have joined a bit late, very important guys, we have started with marginal costing. It has nothing to do with cost calculation. It's a part of management accounting and it assists management in decision making. There are three terms what I have discussed. Marginal cost, that is the cost of producing, manufacturing one additional unit. Variable cost, the cost that varies according to production. ये वो cost है जो production के हिसाब से vary करता है. Examples are raw material, labor and variable overhead. When talking about fixed cost, the cost that remain fixed irrespective of production. ये वो cost है जो irrespective of production will always remain fixed. If you manufacture 1 unit, 1 lakh unit or 0 unit, the cost will remain fixed. Now, let me take a practical situation. You know, most of the companies have to shut down their business. What's the reason? I mean, काफी कंपनीज को क्या करना पड़ता है, कई बार अपना बिजनेस शट डाउन करना पड़ता है बिकॉज ऑफ लॉसेस. व्हाट्स द मेजर रीजन बिहाइंड इट? वेरिएबल कॉस्ट और फिक्स कॉस्ट. प्रॉब्लम कहां पे आता है? वेयर इज द एग्जैक्ट प्रॉब्लम? प्रॉब्लम कहां पे आता है कंपनीज को? दे आर नॉट बीन एबल टू रिकवर देयर फिक्स कॉस्ट और वेरिएबल कॉस्ट. कैन यू गाइस टेल मी? Waiting for your answers, everyone. Good morning, Raman. Good morning, Mr. Zafar Mir. Very good, Mallu. Very good, everyone. Yes, most of the companies who shut down their business, the major headache is what? That they are not being able to recover their fixed costs. Let's say their rent, or let's say their interest cost, let's say their staff salaries cost. See, variable cost kab lagega? When we are manufacturing any units. If we are not manufacturing any unit, no variable cost. But irrespective of production, कंपनीज को अपना फिक्स कॉस्ट पे करना ही पड़ता है, बी इट बैंक इंटरेस्ट, बी इट द रेंट, whatever it is. Let's take a very basic example. I'm the manufacturer of this marker pen. Now, this marker pen is manufactured at a cost of rupees 8. Again, when talking about the manufacturing cost, it's the variable cost. So let's say this marker pen is manufactured at a variable cost of rupees 8. Now, I'm selling this for rupees 10. So after recovering my variable cost, how much I'm earning? Rupees 2. I repeat again, guys. I'm manufacturing this marker pen for rupees 8. That is the variable cost of manufacturing this marker pen is rupees 8. Now, this product is being sold in the market at the rate rupees 10. So every pen I'm recovering 2 rupees after recovering the variable cost. Now, what will be my first target? That these 2 rupees, 2 rupees, 2 rupees, at least I should manufacture and sell that much of pen so that at least I'll be able to recover my fixed cost. So let's say my fixed cost is rupees 2 lakh. Or let's say my fixed cost is rupees 3 lakh. Yes, Hardik. Let's say my fixed cost is rupees 3 lakh. So what will be my target? That we should manufacture and sell that much of pen, that much number of pens, so that my first target is that at least I should recover my fixed cost. So can you guys tell me how many pens should I manufacture and sell so that at least first I can recover my fixed cost? I repeat again, guys. This pen is manufactured at a variable cost of rupees 8 and it is sold for rupees 10. So per pen, I'm recovering 2. So what will be my first target to recover my fixed cost? Let's say my fixed cost is rupees 3 lakh. So how many pens should I manufacture and sell so that at least I'm able to recover my fixed cost? Waiting for your answers. I've got answer from many students. And all your answers are correct. Very good, guys. Quick. Waiting for your answers. Yes, I've got answers from many of the students. Manvi, incorrect answer. Dev Kumar, incorrect answer. Ritika Gupta, incorrect answer. Rest all, everyone correct answer. Manvi, Dev Kumar, Ritika. Yes, Zafar, Ankit Mishra, Nancy, Raman, waiting for your answers. Okay, Ritika, now it is correct. Manvi, please recheck your answer. So point is very simple. I'm manufacturing this pen at a variable cost of 8. I'm selling it for 10. So per pen, how much I'm recovering rupees 2. Now my first target will be what? That 2 rupees, 2 rupees, 2 rupees karke at least we should be able to collect 3 lakh rupees back, because this will be my first target to recover my fixed cost. So my fixed cost is rupees how much? 3 lakh. So how many pens should I manufacture and sell? Very simple, guys. Per pen I'm getting 2. I have to recover 3 lakhs. So how many pens should I manufacture and sell? 1,50,000. So if I'm manufacturing 1,50,000 pen, it means I am safe, that there will be no loss. If my production goes less than 1,50,000, then it is a big trouble for me. So my first target will be what? To manufacture and sell 1,50,000. That at least I should not suffer any loss. Okay, even I'm not making profit, but I'm not suffering any loss. Further, this 1,50,000 pen is what we call as break-even point. I'll be discussing this part in detail. Again, there are no formulas in marginal costing. Marginal costing में भी कोई भी formula नहीं है, just like standard costing. I'll be discussing all the concept that why these formulas. So if we manufacture and sell 1,50,000, we'll be able to recover our fixed cost. And at that point, okay, we are not making profit, but we are not suffering any loss. And that 1,50,000 pence is what my break-even point. Very good, everyone. Now, so most of the companies has to shut down their operation. The major headache is what? Their fixed cost. I request you guys to please copy this explanation. Now, when talking about this chapter, marginal costing, this chapter is based on 5 terms. When talking about this chapter is based on 5 terms. That is my sales, My sales, if we subtract variable cost from sales, we will get contribution. Further, from contribution, if we subtract fixed cost, we will get profit. Let's say my sales is 200. Let's say my sales is 200. My variable cost is 120. Therefore, my contribution will be 80. Now, if we subtract fixed cost from this term contribution, we will get profit. So this chapter is based on these 5 terms only. कोई sixth term है ही नहीं. People say marginal costing is very, very tricky. I mean, it's very vast. The point is, if you are thorough with these 5 points, you can solve any question on marginal costing. So sales minus variable cost, you guys will get contribution. If you subtract fixed cost from contribution, you will get the final figure, that is profit. So we can say, what's the formula for contribution? What's the formula for contribution? We can say sales minus variable. There is one more formula for contribution. Can you guys tell me there is one more formula we can frame from for contribution? See, one formula is sales minus variable cost, we'll get contribution. Another formula can be, yes, so another formula can be, see, 200 minus 120 is 80. We can say 40 plus 40 is also 80. So we can say fixed cost plus profit is also contribution. So either of the ways, ये 5 terms को आपको plus minus divide multiply करके final figure calculate करना है. So this is the key for this chapter. Very good, everyone. So these are the 5 terms you should know, plus minus divide multiply करके at the end of the day, whatever the question is asking, you have to calculate. Now, let's start with this chapter now. Now, the first thing what the examiner is going to ask you and what you have to calculate in every question is PV ratio. In every question, you have to calculate PV ratio. Kuch bhi ho, you have to calculate it. So, what is PV ratio? Very simple, guys. The full form of PV ratio is profit volume ratio. Now, what is PV ratio? It is the percentage of contribution to sales. What is PV ratio? The percentage of contribution to sales. So we can say contribution divided by my sales into 100. This is what we call as PV ratio. So what is PV ratio? The percentage of contribution to sales. हमारा जो contribution है, हमारी sales का कितना percent है, that is what we call as PV ratio. So here my contribution is 80, my sales is 200, my contribution is 80, my sales is 200 into 100. So here 40% is what my PV ratio. So it means what? Sales का 40% क्या है? Contribution है. Contribution is what? 40% of sales. And this term is what we call as PV ratio. So we can say, what is PV ratio in simple terms? The percentage of contribution to sales. जो contribution है मेरी sales का कितना परसेंट है? 40%. My contribution is 40% of sales. Therefore, my PV ratio is what? 40%. If you guys have any doubts till now, you guys can please post your queries. I'll give you time to copy. Wait for some time. So what is PV ratio? PV ratio, what is the meaning of PV ratio? That जो हमारा contribution आ रहा है वो हमारी sales का कितना % है, that is what we call as PV ratio. So if my contribution is 1000, if my contribution is 1000 and my sales is 10,000, what will be my PV ratio? Very simple, 1000 divided by 10,000 into 100, that is 10%. इसका मतलब क्या है कि if my sales is 10,000, then 10% will be my contribution. Another example, let's say my sales is 1 lakh and my contribution is 30,000. My sales is 1 lakh, my contribution is 30,000. It means what? What will be my PV ratio? 30%. Another example, let's say my sales is 2 lakh. Let's say my final sales is 2 lakh and PV ratio is 20% of sales. PV ratio is 20%. It means how much will be my contribution? I repeat again, my sales is 2 lakh, my PV ratio is 20%. It means how much percentage will be my contribution? 20% only. So 2 lakh into 20%, 40,000 will be my, very good guys. Very good everyone. So 40,000 will be what? My contribution. So in short, what PV ratio says? The percentage of contribution to sales. हमारा जो contribution है वो sales का कितना % है वो हमें PV ratio बताता है. Very good everyone. Let's take few questions. I want you guys to answer these questions. Let's say my first question, my sales is 3 lakh, my contribution is 1,20,000. So what will be my PV ratio? Everyone waiting for your answers. Very good, Raman. Very good, Nancy. Very good, Ankit. Very good. This answer is correct. Everyone correct answer. Quick. Good morning, Nayan. Good morning, Srinivas. Your answer is correct. Very good, everyone. So yes, this answer is correct. That is, it is 40%. 1,20,000 divided by 3 lakh, that is 40%. In the meanwhile, if anyone is having any doubts, you guys can please post your query. I'll address every query of each and every student, so don't worry. Now, second question, guys. Let's say my sales is 5 lakh and my PV ratio is, let's say, 30%. Can you guys tell me what will be my variable cost? Can you guys tell me what will be my variable cost? Anjali, I'm not asking contribution. I'm asking what will be my variable cost. So very good. Bhumika, please recheck your answer. Rest all. Okay, Dilip, please check the number of zeros. Rest all correct answer. Gurminder Kaur, please check. Your answer is incorrect. Rest everyone correct answer. Tambeshwari, please check. Your answer is incorrect. Dilip, now it is correct. Very good, everyone. Nayan Patil, please recheck your answer. Your answer is incorrect. Gurminder, now it is correct. Bhumika, correct answer now. Balachandran, please recheck your answer. Ritika Gupta, incorrect answer. Please recheck. Saundarya, correct answer. Mallu, incorrect answer. So see, sales is 5 lakh. PV ratio is 30%. So 5 threes are 15. 1,50,000 will be my contribution. And sales minus contribution will be what? My variable cost. Alternatively, we can say what will be my variable cost. See, sales can be divided in two parts. See, here in my sales is 200. My variable cost was 120 and my contribution was 80. So the percentage of contribution to sales, we call it as PV ratio, and this is 40%. So if PV ratio is 40%, it means contribution is 40% of sales. So variable cost will be how much? 60%. So herein, in this case, my variable cost will be 60%. Now in this question, my PV ratio is 30%. So my variable cost will be what? 70% of sales. So 5 lakh into 70%, this will be 3,50,000. So sales can be divided in two parts, variable cost and contribution. If PV ratio is 25%, variable cost will be 75%. If PV ratio is 35%, variable cost will be 65%. Manvi, Mallu, please check. Now, third question for you. Let's say my contribution is 90,000. And let's say my PV ratio is 30%. What will be my sales? Okay, so I've got answer from Prithviraj, correct answer. Hardik, correct answer. Kasak, correct answer. Ritika Gupta, incorrect answer. Rest everyone correct answer. Okay, Gurminder, incorrect answer. Anjali Kashyap, incorrect answer. Nayan Patil, everyone correct answer. Balachandran, correct answer. See, my contribution is 90,000. My PV ratio is 30%. What will be my sales? So see, sales can be divided in two parts, variable cost and contribution. Now, contribution is 30% of sales, so variable cost will be 70%. And this 30% figure is what? My 90,000. This 30% figure is what? My 90,000. So, we want sales that is 100%. So, 90,000 is equals to how much? It is equals to 30. So, how much will be 100? 3 lakh. So Prakriti, I please check your answer. Sarthak, it is correct. Sarthak, please recheck your answer. Anjali, please recheck your answer. I hope this part is clear to all. Yes, my dear. Let's take one more question. Let's say my contribution is 1,20,000. My variable cost is 60%. So what will be my sales? What will be my variable cost? Waiting for your answers. Hardik, rest everyone, correct answer. Very good, guys. Yes, Raman, it is correct. Very good. Bhumika, please recheck your answer. It is incorrect. Vijay Kumar, incorrect answer. Rest everyone, Vedahi, correct answer. Saundarya, correct answer. Prakriti, incorrect answer. Please recheck your answer, Prakriti. Hardik, no, your answer is correct, my dear. I'm just mentioning the name of the students whose answers are incorrect. Anjali Kashyap, your answer is incorrect. Rest everyone correct answer. It's just simple mathematics, guys. So Manvi, waiting for your answer, my dear. Sanya, you are not posting the answers. Nitin Prajapati, you are not posting the answers. Neeru. Okay, Neeru, I've got your answer. Yashashwini, Prithviraj, Aisha, Sai Kiran Kumar, waiting for your answers. Okay, Nitin, let me check. Gurminder Kaur, I just want the final answer. So herein what we can see is, as I said, there are two parts of sales, variable cost and contribution. Variable cost is 60%, so contribution will be how much? 40%. If variable cost is 60%, contribution is 40%. Now contribution is how much? 1,20,000. So what will be my sales first of all? My sales will be 1,20,000 divided by 40%. So this will be 3 lakh. My sales is 3 lakh. My contribution is 1,20,000. So my variable cost will be how much? 3 lakh minus 120. So this will be 1 lakh. So in short, it's at the end of the day, you have to use simple mathematics for contribution, sales, and variable cost. Yeah, either of the, you can use any of the approaches. I'm just using the easiest possible approach. Alternatively, you can do like this: 1,20,000 divided by 40 into 60. That is also correct. This answer is for everyone. Rest everyone who are thorough with the concepts, then they can apply this way also. All the ways are correct. Okay, Sai Kiran. So Gurminder Kaur, I hope this part is clear to you. Anjali Kashyap, any doubts? Prakriti, any doubts? Vijay Kumar, any doubts? Bhumika Agrawal. Fine. I request you guys to please copy this explanation. Again, what is PV ratio? PV ratio says that contribution हमारी sales का कितना percent है? What is the percentage of contribution to sales? That is what we call as PV ratio. I request you guys to please copy. I'm giving you 2 to 3 minutes time to copy. Again, very important, guys, when I'm discussing the concept part, the examples, what I'm framing and all, I request you guys to copy it and do write your comments also that what you have understood from this concept or explanation. It will help you a lot while revising during the exams. Every time आप formulas मत याद कीजिए. Just write down your comments that what all things sir taught and that is what I understood. So once you will start revising for or preparing for exams now, it will get click, okay, this is what I have written and this is what I have understood at that point of time. Every time you can't see the recorded lecture, it's a waste of time. So better prepare your notes, start writing your notes and comments on every formula or every explanation. Now let's take one more case. Let's say I am manufacturing and selling 500 units. And let's say the selling price is rupees 10. So this will be 5,000. The variable cost is, let's say, rupees 7. So this will be 3,500. Therefore, the contribution will be how much? 1,500. And my contribution per unit is rupees 3. So what will be my PV ratio in this case? %30%. That is contribution divided by my sales into 100. Very good, everyone. Now, a question for you. I want you guys to answer as quick as possible. Don't go with the calculation and all. Let's say instead of 500 units, I'm manufacturing 700 units. Instead of 500 units, I'm manufacturing 700 units. क्या PV ratio change होगा या नहीं होगा? Will the PV ratio change? Yes or no? Waiting for your answers. Quick. So I've got answer from Hardik. No. Dev Kumar. Yes. Saundarya. No. Pranav and all. Okay. So Sanya, whether it is yes, the PV ratio is going to change. Aisha. Yes. There are few students. Whether Sai Kiran. No. Ritika, yes. Nayan, no. Mallu Jadar, no. Nitin, yes. Prakriti, yes. Sarthak, no. Tambeshwari, yes. So 50% says yes, 50% says no. So let's use my veto power. The answer is no. It's not yes. Let's try it. As I said, instead of 500 units, I'm manufacturing 700 units, right? So 700 into 10, this will be 7,000. 700 into 7, it will be 4,900. So this will be 2,100. So my contribution is 2,100 divided by 7,000 into 100. 30%. No change. Yes, Prithviraj. Yes, Dev Kumar. Another example, let's say if I'm manufacturing and selling 1 unit. अगर मैं 1 unit बेचता हूं, my sales will be what? 10. My variable cost will be what? 7. My contribution will be what? 3. So 3 divided by 10 into 100, 30%. If I manufacture and sell 1 lakh unit also, the PV ratio is not going to change. But next question, very important. No worries, Tambeshwari, that's okay. Next question, very important. Let's say there is no change in sales quantity. But let's say my variable cost or selling price per unit, this variable cost or selling price per unit is changed. Let's say my selling price per unit is reduced to 9. तो my next question, अगर हमने selling price 9 कर दिया तो क्या PV ratio change होगा या नहीं? I mean, is the PV ratio going to change or not? So my revised contribution will be 2. So PV ratio will change or not? Yes, it will change. Everyone correct answer. Very good, guys. So major thing is what? If the sales is increasing, if the units are increasing or decreasing, the PV ratio will not change. But yes, very important. If there is any change in selling price per unit or variable cost per unit, yes, the PV ratio will change. So very important, guys. I repeat again. PV ratio will remain constant at all the level of sales. कितना भी units आप ज्यादा manufacture कर रहे हैं, कितना भी कम manufacture कर रहे हैं, irrespective of the units manufactured, the PV ratio will always remain constant. But let's say if there is any change in selling price per unit or variable cost per unit, yes, the PV ratio will change. So major relationship कौन सा maintain रहना चाहिए? This is the major relationship. And because of this relationship only, the PV ratio will change. If there is any change in this relationship, the PV ratio will change. So alternatively, we can say the formula for PV ratio can be contribution per unit divided by selling price per unit into 100. So this will be 3 by 10 into 100. So my point is very clear. If there is any change in units, the PV ratio will remain constant. Units kitne bhi manufacture karo, there will be no impact on the PV ratio. But yes, if there is any change in selling price per unit or variable cost per unit, yes, the PV ratio will change. Now, well, from practical question point of view, if the question is silent, and then the sales is increasing or sales is decreasing, it means what? Units are increasing or units are decreasing. So if the question is silent, PV ratio will remain constant at all the level of sales. But if the question clearly specifies that there is a change in selling price per unit or there is a change in variable cost per unit, yes, the PV ratio will change. So I'm writing this assumption also. If the question is silent, then PV ratio will remain constant at all the level of sales. However, if the question clearly specifies about change in selling price per unit or variable cost per unit, then PV ratio will change. So if the question is silent, then PV ratio will remain constant at all the level of sales. So sales badega, it means what? Units are increasing. If the sales is reducing, units are reducing. There is no change in selling price or variable cost per unit. But if the question clearly specifies that there is a change in selling price per unit or variable cost per unit, yes, PV ratio will change accordingly. So I request you guys to please copy this explanation. If you guys have any doubts or queries in PV ratio, you guys can please post your query. I'm done with the explanation of PV ratio. Whatever the queries that are running in your mind, you guys can please post your queries. I'll address each and every query. Don't worry, guys. Very good, Raman, Nancy, Bala Chandran, Ankit Mishra. I think today you are not active much. So please copy this part. Okay, 1 second. There is a query. It is contribution divided by sales into 100, my dear. Don't go with the formula, Ritika. Just it's a basic mathematics, my dear. It is contribution in the numerator and denominator. It is sales. Numerator divided by denominator into 100. Now let's start with the next part. So the first part, what the examiner generally do ask is PV ratio. Now let's proceed further with the next part. So the second question, what the examiner can ask is break even sales. The second question, what the examiner, again, don't use any formulas in marginal costing. I'll be putting a few questions in front of you. So when talking about break even sales, what is break even sales? So break even sales is that level of sales where there is no profit, no loss. What is break even sales? That level of sales where there is no profit, no loss. Or we can say the level where the sales is equals to total cost. When talking about total cost, it is fixed plus variable. So what is break even sales? That level of sales where there is no profit, no loss, or we can say at the point where The sales is equals to total cost. When talking about total cost, it is fixed plus variable. Let's take a question. The same question, let's say my sales is 200. My variable cost is 120. Therefore, my contribution will be 80. My fixed cost is 40. Therefore, my profit is 40. The relationship between contribution and sales, we call it as PV ratio. We call it as PV ratio. That is contribution divided by my sales into 100. So that is 80 divided by 200 into 100. That is 40%. This is what we know. Now let's take a situation in this question. See, after making a sales of 200, I'm earning profit of rupees 40. Can you guys tell me the sales where there will be no profit, no loss? Waiting for your answers. Again, don't use formulas. There are many students who have already learned this chapter. So can you guys tell me what will be the final answer? What will be the sales where there will be no profit, no loss? So Kasak, I have received your answer. Dev Kumar, I have received your answer. Hardik, I have received your answer. Bhavna, Sai Kiran Kumar, Aisha, Ritika. I'm getting this answer from all the students except one. So 160 I've got from everyone. Rest all, please post your opinion. There are few more answers. Anyone else? Yes, quick guys. The more you will participate in the session, the better you guys will be. Out of 47 students, I have received answer only from 16 students. Rest all of you guys sleeping or what? Do post your answers, everyone. So now I've started receiving answers. Apurva, Shweta, Sanya, Amit. Yes, rest all. Prakriti, Tisha, Bhumika, waiting for your answers. Jay Lakshmi, Karan, Ritika, Tambeshwari, I've received. Srinivas, Nayan Patil, waiting for your answers. Pranav, Sarthak, Gurminder Kaur, you have not posted the answer. Okay, Ritika, I received. Okay, Pranav, let me check. Okay. So most of the students posted this answer 160. This is the answer what I got from most of the students. That is, sir, 160 is the correct answer. So most of the students posted this answer 160. Now, in my opinion, how they calculated this 160? Sir, as you said, the point where sales is equals to total cost, that will be break-even point. So what they did, 120 plus 40, that is variable cost plus fixed cost, we will get the sales, and this 160 is the point where there is no profit, no loss. This is what most of the students did. Wait, guys, now. Yeah, alternatively, see, these are the two approaches what most of the students did. That is, sir, 120 plus 40, that is 160, or 200 minus 40, that is 160. Sir, 160 is the break-even sales. But what if I say this 160 is incorrect? This answer is incorrect. Now the question is why it is incorrect. See, as I told you guys, variable cost is the cost that varies according to production. So guys, if the sales is reducing, it means what? If the question is, see here in the question is silent. So the sales is reducing, it means the quantity is also reducing. There is no change in selling price per unit or variable cost per unit because the question is silent. So if the sales is reducing, the variable cost will also reduce, guys. If the sales is from 200 to 160, if the sales is reduced, then the proportionately the variable cost will also be reduced. As I said, that PV ratio, that is the relationship between contribution or sales or variable cost or sales, will remain constant at all the level of sales. ये चेंज होगा ही नहीं रिलेशनशिप. बट अगर क्वेश्चन क्लियरली स्पेसिफाई करता है दैट देयर इज एनी चेंज इन सेलिंग प्राइस पर यूनिट or variable cost per unit, yes, the PV ratio will change. So herein, there is no change in selling price per unit or variable cost per unit. So the PV ratio is constant. So herein, see, for this case also my PV ratio will be 40%. So 160 into 40%, this will be 64, this will be 96. Fixed cost is 40, so my profit will be 24. So this is incorrect answer. This answer is incorrect because if the sales is reducing, अगर units manufacture कम किए तो variable cost भी तो कम लगेगा. So this answer is incorrect. Now what's the correct answer? See, we have to do reverse calculation. See, at break even sales, my profit should be what? 0. Now, this fixed cost remain unchanged at all the level of sales. At 200 also it was 140, 160 also it was 40. So this fixed cost will remain constant at all the level of sales. Now, contribution minus fixed cost is profit. So what will be my contribution? 40 minus 40 will be 0. Now, as I said that the relationship between contribution and sales will remain unchanged unless and until question specifies about say change in selling price per unit or variable cost per unit. So this 40 we can say it is equals to 40%. So how much will be 100%? This will be 100. And variable cost will be my balancing fee. So at 100 sales, the profit will be 0. If you guys have any doubts till now, you guys can please post. The point is, first you should understand that why your answer is incorrect. Very good, Nancy. So very simple, guys. At break-even sales, my profit is what? 0. As I said, that level of sales where there is no profit, no loss. So it means what? If I don't want to earn any profit, it means this will be 0. Now 40 is my fixed cost. It remains constant irrespective of production. So 40 is my fixed cost. Now what will be my contribution? This minus this should be 0. So this will be what? 40. Now contribution is 40. PV ratio is 40%. Contribution is 40. PV ratio is 40%. So how much will be my sales? 100. So this is what my break-even sales. So we can say what actually I did. What actually I did? 0 is what? My profit. Because see, sorry, what actually I did? 0 plus 40 divided by 40%. This is what I did. Because this plus this, fixed cost plus profit will be what? My contribution. So 0 plus 40 will be divided by 40% will be what? 100. Now what is 0? My desired profit. What is 0? My desired profit. And at break-even sales, my desired profit is what? 0. So 0 we can ignore. 40 will be what? My fixed cost. Divided by 40% is what? My PV. So 40 divided by 40% will be what? 100 rupees, and that will be my break-even sales. So we can say when talking about the formula for break-even sales, it is fixed cost divided by PV ratio. Anyone having any doubts or queries, you guys can please post your queries. Very important, guys. This 160 is incorrect. See, I really appreciate that all of you guys posted this answer. But guys, every students in each and every person learn from mistakes. So guys, you did the mistake. We have corrected it. Further, what was wrong in your answer? That also I have discussed. And what is the correct answer also? That is what I have discussed. Anyone having any doubts or queries, guys? Yes. So I'm asking individually Prakriti, Pranav, Bhumika, Nayan, Saundarya, Ritika, Ambeshwari. Apurva, Neeru, Anjali, Nitin, Dinesh, Tambeshwari, Pranav, Dilip, Nayan, Aisha, all of you guys, Bhavna, Sai Kiran, Dev Kumar, Kasak, all of you guys posted this answer 160. I hope now this part is clear to all. Even Raman, also, you also please check your answer. Yes, Raman, well said. Balachandran, correct answer. Fixed cost will remain constant. Nancy, again, you also posted 160. Raman also posted 160. So, Ankit, why you are not posting the answers, my dear? Do post your answers. Gurminder Kaur, see, we have calculated contribution, that is 40. We have calculated sales, that is 100. So 100 minus something will be 40. So what is that something? 60. Prakriti, can you please ask me your query again? Gurminder, any doubts? Okay, Prakriti, any doubts? Anyone else? Ritika, any doubts? I think Ritika posted some queries. So Ritika, any doubts? Great. So when talking about what's the formula for break-even sales, fixed cost divided by PV ratio. How come this formula is derived? I hope this part is clear to all. I request you guys to please copy this explanation, giving you 2 minutes time to copy everything. Again, do copy everything. Do write your comments that, okay, this was the mistake I did. Now, sir corrected in this way. Every time you can't check the recorded lecture. So just do write what you are learning from this session and do write your comments also so that at least once you are revising, it will help you a lot. At break-even point, sales is equals to total cost. So see here, my sales is 100 and my total cost is also 60 plus 40, 100. That's why the profit will be 0. Let's take one more question. So let's discuss one more question. So let's say my sales is 5,000, my variable cost is 3,500, my contribution will be 1,500, my fixed cost is 900, and my profit is 600. The relationship between contribution and sales, we call it as PV ratio. That is 1,500 divided by 5,000 into 100, that is 30%. Or alternatively, we can also say 3 by 10 into 100, that is also 30%. So after making a sales of 5,000, how much profit we are earning? 600. So can you guys tell me what will be my break-even point in this case? So I've got answer this time. Correct answer from Aisha, Nitin, Nayan, Dev Kumar. Everyone waiting for your answers. Anjali, now this time everything is correct. Very good, Bhavna. Your answers are correct. Hardik, Sanya, Sai Kiran Kumar, please recheck your answer, my dear. Your answer is incorrect. Rest Neeru, Kasak, Srinivas, Vedahi, Dilip, Nancy. All your answers are correct. Dinesh Kumar. Yes, Raman, Bala, Chandran, and Ankit waiting for your answers. Saundarya, correct answer. Ritika, waiting for your answers. Prakriti, waiting for your answer. Okay, now it is correct, Sai Kiran. So I've got correct answer from everyone. Very good, guys. Very good, Mr. Parvez. Gurminder, you have not posted the answer. Very good, guys. So now, as I said, at break-even sales, how much will be my profit? 0. My fixed cost is how much? 900. It will remain constant at all the level of sales. Therefore, my contribution will be how much? 900. Now, this 900 is equals to how much? 30%. So, how much will be 100%? 3,000 rupees. So, what I did again, the same thing, 900 divided by 30%. That is 3,000 rupees. That is, we can say, what is the formula what we have used? Fixed cost divided by my PV ratio. So this is the formula for calculating break even sales in rupees. That is fixed cost divided by my PV ratio. Now one more thing. See, we have got the break even sales of rupees 3,000. We can say what will be the number of units? Very simple, guys. We are manufacturing and selling how many units? Sorry. We have got the break-even sales of 3,000 rupees. Now, per unit selling price is what? Rupees 10. एक यूनिट हम लोग कितने में सेल करते हैं? रुपीज 10 में. So how many units? 3,000 is the total sales. The selling price is rupees 10. It means how many units we have manufactured and sold? 300 units. We can say, or we can say 300 units. So this is the way to calculate break-even sales in rupees or in unit. Very good, everyone. Okay, there are few queries. Let me check. First one is, I think, Gurminder Kaur. So Gurminder, admin sir, are you there? Manish sir? Gurminder Kaur को आप unmute कीजिए. I think she is facing some problem. Gurminder, tell me.
Hello, sir.
Yeah, Gurminder, very good morning. Tell me, dear.
Good morning, sir. So actually, I am confused regarding this. Actually, how to calculate again and again. I am confusing in that only.
I think it's a basic mathematical problem, my dear. See, very simple. एकदम simple सोचो, just think simple. See, the sales can be divided in two parts, right? Variable cost and contribution, right? The first thing, is it clear? Gurminder, are you there? एडमिन सर आप उसको अनम्यूट कर दीजिए.
Yes, sir.
Okay. So sales can be divided in two parts, variable cost and contribution, right? Now the percentage of contribution to sales, we call it as PV ratio, and that we have already calculated, that is 30%. Now, this figure 900, what we have is what my contribution, write it like this. Now herein, if the contribution is 30%, variable cost will be 70% and sales is always 100%. Till now, any doubts, Gurminder?
No, sir. All clear.
ये तो जो है मैंने सिर्फ एज इट इज स्ट्रेट अवे लिखा है, राइट? My sales, variable cost, contribution. PV ratio is 30%, so variable cost will be 70%. Now, 30% is my PV ratio and my contribution is 900. Now, herein what we can see is 900 is equals to what? 30%. Now, if we want to calculate sales, we will multiply it by 100. If we want to calculate variable cost, see, 900 is equals to 30%. If we want to calculate variable cost, what is equals to variable cost? 70%. So we will multiply it by 70%. So in short, जो जिसके बराबर है उसको आप डिनोमिनेटर में रख लीजिए, and what you have to calculate, keep it in numerator. I hope this part is clear now, Gurminder.
Yes, sir. Yes, sir. Clear.
सीधा सा फंडा है. Prepare this chart, sales, variable cost, contribution. Contribution is 30%, variable cost will be 70%. Now, contribution is how much? 900. So 900 is equals to 30. How much will be 100? 100 is what? My sales. So this will be 3000. If we want to calculate variable cost is equals to 70. So multiplied by 70. So जो आपको कैलकुलेट करना है उसको न्यूमरेटर में रख लीजिए और जो जिसके बराबर है उसको आप डिनोमिनेटर में कर दीजिए. I hope it is clear.
Yes, sir. Yes, sir.
Perfect.
Yes, sir. Thank you.
Let's, a question from my side for you. Let's say my variable cost is 4900. Let's say my variable cost is 4900. What will be my sales? Can you tell me quick, Gurminder?
Yes, sir. 1,47,000.
No. 49,000 is my variable cost again.
Okay.
Do post the correct answer. Do tell me. What will be my sales? Again, see, 4900 is what? My variable cost. It is equals to how much?
70%.
70. What you have to calculate?
A sales.
What it is equals to how much?
100%.
That's it.
Okay, sir. Okay.
Simple hai yaar. Keep the thing simple.
Okay, sir. Thank you and sorry.
Perfect. Arey, no,
Yes,
that's
sir.
okay, yaar. Just feel free to post all your queries. These sessions are conducted for your benefit only. So whatever running in your mind, just do post it. We have sufficient sessions for marginal costing. Don't worry.
Okay,
By
sir.
the end of this session, I want each and every student of mine to be perfect in marginal costing. So this part is done now. Okay, Ritika, any doubts, my dear? I think Ritika also posted a query. I think Ritika is also finding difficulty in calculation. Anyways, I hope Ritika, this part is clear to you now. So fine, let's get back to the topic. Break-even sales we started. It's the point where there is no profit, no loss, or we can say sales is equals to total cost. So herein, 900 is what? My fixed cost divided by 30%. We can say 3000 is my break-even sales. Now, each and every unit is sold at the rate rupees 10. So what will be my break-even sales in units? 300 units. Now, there is one more way to calculate break-even sales in unit. Take the same example. I'm manufacturing and selling this pen for rupees 7 at a variable cost of rupees 7 and the selling price is 10. So per pen, how much I'm recovering? Rupees 3. Now, what will be my first target to recover my fixed cost? So per pen, I'm recovering 3. How much I want to recover for my break even? 900. So 900 I want to recover. Per pen I'm recovering 3. It means how many pens should I manufacture and sell? 300 pens. So another way to calculate break-even sales in unit, very simple. How much I want to recover? 900. Per pen, how much I'm recovering? 3 rupees. So we can say 300 units. So we can say, we can easily frame the formula again. 900 is what? My fixed cost. 3 is what? My contribution per unit. So this is the formula for break-even sales in units. So these are the two ways to calculate units. So you can use either of the approaches. If you guys have any doubts or queries till now, you guys can please post your query. I'll be discussing this also. Don't worry, Tambeshwari. Have some patience, my dear. Yes, anyone having any doubts or queries in this part? When talking about break-even sales in rupees, very simple. Fixed cost divided by PV ratio. If you want to calculate break-even sales in units, fixed cost divided by contribution per unit. How come these formulas are derived? I have already discussed. I request you guys, it's a very easy chapter, Nayan. Just go with the flow. Don't see that what is the end result. Just go with the flow. By the end of these 4 sessions, you will be thorough with marginal costing. Don't worry. So I request you guys to please copy this explanation. In the meanwhile, whatever the queries you have, you guys can please post. I hope Ritika and Gurminder, you are thorough with the concept. Manvi, again, do post your answer. You are not posting the answers. These, I mean, from the last 2 questions. So do post your answers. Whatever the query is running, whatever running in your mind, do post whatever it is. I'll try to address your query. Giving you 2 to 3 minutes time to copy this explanation. No worries, Ritika. Just pay attention to what I'm teaching you guys. You will be thorough with the concepts. Don't worry. So, anyone having any doubts or queries, guys? Waiting for your queries? Else, I'll be putting a few questions in front of you. Ready for the questions? So, a question for you guys now. My break-even sales is 3,60,000. My fixed cost is 90,000. My variable cost is 1,20,000. Or let's say my break-even sales is 3,60,000. My fixed cost is 90,000. What will be my PV ratio? Waiting for your answers. So I've received answer from Hardik. Rest all waiting for your answers. Sanya, Kasak, correct answer. Hardik, correct answer. Nitin Prajapati, incorrect answer. Dilip, incorrect answer. Vedahi, Prithviraj, Sheikh, Parvez, Bhavna, everyone correct answer. Okay, so Nitin Prajapati, please recheck. Bhumika, please recheck. Gurminder Kaur, please recheck. Rest everyone correct answer. Balachandran correct. Raman correct. The students who have posted incorrect answer, please recheck your answer. Rest everyone correct answer. So Dilip, now it is correct. So the correct answer is very simple. When talking about break-even sales, it is fixed cost divided by PV ratio. Fixed cost divided by PV ratio. So here in break-even sales, 3,60,000 we have. 90,000 is my fixed cost. PV ratio we have to calculate. So PV ratio will be 90,000 divided by 3,60,000 into 100. Ritika, please recheck. Yes, Nitin, it is the correct answer now. Anyone with any doubts or queries, guys? Yes, yes, Dinesh, it is correct now. Very good, everyone. Very good, Nancy. It is correct now. Balachandran, Ankit Mishra, Raman Tambia. It's correct now. So, guys, enough of discussion on break-even point. Tambeshwari, I'll be taking few tricky questions also. Don't worry. So let's take a break of 15 minutes. Now, badly need this break. So let's take a break of 15 minutes. I'll be back after 15 minutes with the remaining part of the chapter. So till then, just have a cup of coffee and be ready for the next part. So, admin sir, Welcome back, my friends. So before the break, we discussed the concept of break-even sales. I repeat again, guys, break-even sales is that level of sales where there is no profit, no loss. That level of sales where there is no profit, no loss, or we can say sales is equals to total cost. Further, if you want to calculate break-even sales in rupees, the formula is fixed cost divided by PV ratio. And if you want to calculate in units, it is fixed cost divided by contribution per unit. So now enough of discussion on break-even sales. Now let's start with the next part. Let's start with the next part. The third part wherein examiner is going to ask you desired sales. Desired sales. Let's take the same question wherein my sales is 200. My variable cost is 120. My contribution is 80. My fixed cost is 40. Therefore, my profit will be 40. The relationship between contribution and sales, we call it as PV ratio. And this is 80 divided by 200 into 100. $80 divided by 200 into 100, that is 40%. Now, in break-even sales, what was my desire? To calculate the level of sales where there is no profit, no loss, or we can say the profit or loss is zero. Now, let's take a situation wherein I have a desire to earn rupees 600. My desired profit is 600. I have a desire to earn a profit of 600. Can you guys tell me how much sales is required to earn this profit of 600? Waiting for your answers. In break-even sales, my desired profit was what? Zero. Let's say my desired profit is 600. What will be my sales to earn a profit of 600? So as expected, Hardik, very good. Your answer is correct. Aisha, incorrect answer. Please recheck your answer. Vedahi, correct answer. Sanya, correct answer. Anjali, incorrect answer. Prithviraj, Gorpode, yes, it is correct. Nayan Patil, it is incorrect. I'm getting many answers actually. 1400, 1600, 48,000. Anyone else with any other answer? Quick, I want answers from everyone. Yes, Gurminder, do post your answer. So I've received your answer, Raman. Suniru, where are you, my dear? Do post your answer. Dinesh Kumar, Manvi, Anjali Kashyap, Dev Kumar. Okay, so I've received your answer, Tambeshwari. Sai Kiran Kumar, Vijaya Kumar, Saundarya, Prakriti, Bhumika, Bhavna, Yashlin. One more answer, 1350. Very good, Amit. Xiaomi, I don't know what's your name. I've got one more answer, 1500 also. So guys, Very simple. As I discussed in break-even sales, my desired profit was what? 0. But here in my desired profit is what? 600. So my desired profit is 600. My fixed cost will always remain constant irrespective of production. So what will be my contribution? Contribution minus fixed cost is profit. So my contribution will be what? 640. So 640 is equals to 40%. So how much will be 100%? 1600. Again, I'm using the same concept what I have discussed till now. So 1600 is the correct answer. Many students posted 1400. But 1400 is incorrect. I think most of the students taken 560 instead of 640. That's why I think it is 560 divided by. Yes, so 560 is not the contribution. My desired contribution will be 640. So the students who posted 1400, I hope please recheck your concepts and calculation. So again, when talking about desired sales, what I did again, what I did 40 plus 600. This is 640 what we got divided by 40%. This is how I got 1600. So what is 40? My fixed cost. What is 600? My desired profit. What is 40%? My PV. So I hope this part is clear to all. How come these formulas are derived? If you guys have any doubts in this part, you guys can please post your queries. Further, I request you guys to please copy this explanation. Tambeshwari, any doubts, my dear? Cash break-even sales means that Tambeshwari, you have to ignore depreciation in fixed cost to calculate the break-even sales. So fixed cost minus depreciation, you will get cash fixed cost divided by PV ratio, you will get cash break-even sales. Anyone else with any doubts or queries, guys? Let's take one more question. I hope Tambeshwari, your query is resolved. Let's take one more question. Let's say my sales is 500. Per unit it is 10. So total it will be 5,000. Variable cost it is 507. This will be 3,500. Therefore, my contribution per unit will be 3 and this will be 1,500. My fixed cost will be 900 and my profit will be 600. Now let's say, so the relationship between sales and contribution, we call it as PV ratio, and this is 30%. Now let's say I have a desire to earn a profit of 3,000 rupees. So what will be my desired sales? Can you guys tell me what will be my desired sales to earn a profit of 3,000? Hardik, very good. Vedai, very good. Correct answer. Aisha, correct answer. Dilip, correct answer. Sania's incorrect answer. Please recheck. I think there is a typing error because most of the time you are posting correct answers. Sai Kiran, correct answer. Sahitya, incorrect answer. Amit Pandit, correct answer. Shweta, Nitin, Parvez, Anjali, correct answer. Kasak, correct answer. So again, the same way, my desired profit is 3,000. My fixed cost is 900. So this will be 3,900. This 3,900 is equals to 30%. So how much will be 100? 13,000 rupees. Again, we have applied the same concept, that is desired sales in rupees, that is fixed cost plus so my fixed cost is 900. My desired profit is 3,000 divided by 30%. This is how I got 13,000 rupees. Further, the per unit selling price is 10. So this will be 1,300 units. There is one more way. Very good, Dinesh. Neeru, please recheck. Okay, now it is correct. One more way to calculate desired sales in units. Let's say this pen is manufactured at a variable cost of 7, sold at the rate 10. So my contribution per pen is 3. Now my first target was to recover my fixed cost. After recovering 900, now I have an additional desire to earn 3,000 extra. So in aggregate, how much I want to recover? 900 towards fixed cost and 3,000 towards my profit. So in aggregate, I want to recover 3,900. Per pen, I am recovering 3 rupees. So 3,900 divided by 3, 1,300 pence. If I manufacture and sell, I'll earn my desired profit. How can a desired sales and break-even sales are same, Srinivas? When talking about desired sales, very simple, some desired profit is given. The logic at break-even sales, my desired profit is by default 0 because break-even sales में हमारा profit क्या होता है? 0. So herein, when talking about break-even sales, my desired profit is straight away 0. But when talking about desired sales, they will give some desired profit, that this much you want to earn, so how much sales is required? This much you want to earn, how much sales is required? So this is how it works. So there is a difference between break-even sales and desired sales. Bhavna Garg, I hope this part is clear to you also. So herein, when talking about desired sales in units, again, first I was about to recover my fixed cost. Now I have a desire to earn a profit, that is what we call as desired profit. And per pen, I'm recovering how much? 3. That is what my contribution per unit. So I want to recover 900 plus I want to recover 3,000 also. And per pen, I'm recovering 3. So this is how we will get 1,300 units. So I request you guys to please copy this explanation. I'm done with this concept now. Giving you 2 minutes time to copy this explanation and do write your comments what you have learned from desired sales. Now, let's start with the next part, that is I'm not getting what you're saying, Hardik. So let's start with the next part, that is margin of safety or safety margin. What is safety margin? The word itself says that जो extra margin है from the dead point. So when talking about margin of safety, what it says that how much we are safe from deadline of business. How much we are safe from deadline of business. When talking about deadline, it talks about break even sales. So it means that आप deadline से कितना safe है, that is what we call as margin of safety. So let's say my deadline is 3,000 units. This is my deadline, 3,000 rupees. Let's say my deadline is 3,000 rupees. And right now I am at 5,000. Right now I am at 5,000. My deadline is 3,000. I can't go below 3,000. So how much safe I am? 2,000. So this is my margin of safety. This is my actual sales where I am, my deadline. Or we can say my break-even sales. So when talking about the formula for margin of safety, we can straight away say that when talking about margin of safety, it is actual sales, the place where we are standing right now, minus the break-even sales, that is my deadline. We can't go below break-even sales. And that is what my margin of safety. So if my actual sales are 5,000, my break-even sales is 3,000, then my margin of safety sales will be 2,000. So herein further we can say that actual sales is also divided in two parts. Break-even sales and margin of safety sales. So if the break-even sales is 60% of the total sales, then the balance will be what? 40%, that will be margin of safety. So let's say once we start making sales, first we reach break-even point. Let's say I started from 0. So what we will first reach break-even sales. Now at break-even sales, what we do recover? At break-even sales, what we do recover? We recover our fixed cost. So once we recover our fixed cost at break-even sales, the extra sales what we are making, let's say we reach 5,000. So extra sales what we are making is what? Margin of safety sales. And from this, see, my fixed cost is already recovered at break-even sales. So जैसे ही break-even sales cross होगा, जो भी extra, let's take a very basic example. I'm manufacturing and selling this. I'm manufacturing this pen at a variable cost of 8. I'm manufacturing this pen at a variable cost of 8 and I'm selling this for 10. So per pen I'm recovering rupees 2. Now let's say my fixed cost is 1 lakh. Let's say my fixed cost is 1 lakh. So how many pens should I manufacture and sell to earn break even? 50,000 pens. So once I reach 50,000 pens, I am safe. So 50,000 into 2, 1 lakh, my fixed cost is recovered, I am safe. Now, let's say if I'm manufacturing and selling 50,100 pens, extra 100 pens we are manufacturing. How much extra contribution we will be getting from these 100 pens? 200 rupees. So this extra contribution over and above fixed cost, what we call it as profit. So ultimately, जैसे ही आप ब्रेक इवन सेल्स क्रॉस करेंगे, आपका फिक्स कॉस्ट रिकवर हो चुका है, जैसे ही आप ब्रेक इवन सेल्स क्रॉस करेंगे, जो एक्स्ट्रा कंट्रीब्यूशन आता है वही हमारा क्या होता है, प्रॉफिट. सो अल्टरनेटिवली वी कैन से that another formula for margin of safety is what, profit divided by PV ratio. That is also the formula for margin of safety. I'll discuss this with the help of a practical case also. Let's say my actual sales. Actual sales is 5,000. Variable cost is 3,500. Contribution will be 1,500. Fixed cost is 900 and profit is 600. So PV ratio is 30%. So my break even sales is how much? It will be 3,000. This will be 2,100. This will be 900 and 900 and 0. Herein my PV ratio is how much? 30% is my PV ratio. Now let's say once we cross break even sales, how much extra we are selling? 2,000. My PV ratio is 30%. So how much we are earning? 600. Now there is, my fixed cost is already recovered till break even sales. So extra contribution over and above fixed cost is what we call as profit. So my profit will be 600. So we can say, to calculate the margin of safety, we can straight away say that whatever my profit will be my contribution for margin of safety. So contribution divided by PV ratio, or we can say profit divided by PV ratio, is what, margin of safety. Not contribution. Actually, we can say extra contribution over and above fixed cost what we are earning divided by PV ratio is what my margin of safety. And what is that term? Extra contribution over and above fixed cost, we call it as profit. So there are two formulas for margin of safety. The first one is actual sales minus break-even sales. That is also what I have discussed in detail. Now, profit divided by PV ratio, again, the concept I have discussed in detail. If you guys have any doubts or queries in this part, you guys can please post your query. Margin of safety is also over. So, actual sales minus break-even sales is margin of safety. Profit divided by PV ratio is also margin of safety. If you want to calculate margin of safety in units also, it is profit divided by contribution per unit. This is all what about margin of safety. I hope you guys are thorough with the concept. Anyone having any doubts or queries, you guys can please post. Waiting for your queries, because guys, I'm going to put up many questions in front of you in the coming session. So I want you guys to be thorough with the concept. So still, if any conceptual queries, because yes, the basic theory part is over now. So I'll be starting with the practical question. Apurva, very simple, my dear. My total sales is 5,000. My variable cost is 3,500. My fixed cost is 1,500. Sorry, my contribution is 1,500. My fixed cost is 900 and my profit is 600. Now, with the help of these figures, I calculated break-even sales. That is 900 divided by my PV ratio 30%. I have got break-even sales. Now, at break-even sales, मेरा fixed cost already recover हो चुका है. What is break-even sales? The point where we recover our fixed cost or profit or loss is zero. So herein, see, at 3,000 sales, my fixed cost 900 is already recovered. 900 से ज्यादा तो है नहीं. 900 already recover हो गया है. कहां तक? Break-even sales तक. Now, once you cross break-even sales, whatever the extra contribution you are getting, that is that is all what we call as profit. I hope, Apurva, your query is resolved. मेरा fixed cost 900 है. Fixed cost will remain constant at all the level of sales. तो fixed cost तो already 3,000 की sales पे ही recover हो गया है. In that previous example, 50,000 pens, if you manufacture and sell, your fixed cost is recovered. Let's say if you manufacture and sell 50,001 pen, For one extra pen, how much contribution would I'll be getting? 2 rupees. And this 2 rupees will be what? My profit. Because 50,000 pens पे मैंने fixed cost already recover कर ही लिया है. It may vary from question to question, Hardik. I'll be discussing few questions. Okay, see, Kasak Yadav, once you cross break-even sales, एक बार आपने ब्रेक इवन सेल्स क्रॉस किया, फिर जो भी एक्स्ट्रा सेल्स करेंगे, वी कॉल इट एज मार्जिन ऑफ सेफ्टी सेल्स. And from that extra sales, we will be getting extra contribution. That extra contribution is what we call as profit, because my fixed cost is already recovered till break-even sales. Anyone else? I'm asking everyone, any doubts by whatever it is, you guys can please post. Amit, Anjali, Apurva, Aisha, Sai Kiran, Bhavna, Bhumika, Gurminder, Jay Lakshmi, Isha, Karan, Kasak, Kambeshwari, Nancy, Mallu, anyone, Sarthak, Gurminder Kaur. Which illustration you are talking about, Tambeshwari? I'm not getting. I have not yet started the questions only. I have just discussed the concepts. That's it. Yes, Srinivas, you can continue the session. That's okay. I understand you are just attending these sessions from your office. So that's okay. No worries. That's completely okay, Srinivas. Make sure, I just want to make sure that you are thorough with the concept. That's it. Nothing more than that. The purpose of asking the question is to test that whether you guys understood, whether you guys are actually thorough with the concepts or not. So that is the scene. I hope this is clear to you, Srinivas. So you can attend the session even if you are not answering. It's okay. But rest all those who are viewing the lecture from your place or from home, do post your answers. It will help you a lot. Anyone else? Raman, Balachandran, Nancy, Ankit Mishra, anyone having any doubts? That's okay, Srinivas. It happens. You are learning this chapter for the first time, so it's okay. No worries. Sarthak, okay, one more explanation. You need more. So when talking about margin of safety, it's the safety margin. That is how much we are safe from deadline. So when talking about deadline, that deadline is what my break-even sales. So if my actual sales is 5,000, my break-even sales is 3,000, how much safe I am? 2,000 rupees. Now, so we can say actual sales minus break-even sales is margin of safety. Now very important, Sarthak. See, at break-even sales, आपका पूरा cost recover हो जाता है. See, variable cost तो as and when we manufacture product आपका लगेगा. But when talking about fixed cost, it remain constant. So the fixed cost is already recovered till break-even sales. Once you calculate break-even sales, it means what? That after recovering your variable cost, you are able to recover your fixed cost. Now, let's say my break-even point is 10,000 rupees, 10,000 units. Now, once you cross this 10,000 units, whatever the extra contribution you are getting is what we call as profit, because fixed cost already 10,000 units tak recover ho gaya hai. So that's why we call that, we can frame this formula as that profit divided by PV ratio. What is actually profit? The extra contribution after recovering fixed cost. So we call this term as profit. So that's why profit divided by PV ratio is margin of safety. So no worries, Srinivas. That's completely okay. Sarthak, hopefully your query is resolved. So let's sum up what we have discussed in today's session. There are many concepts what we discussed. So let's take a quick summary of what all we discussed. So we started with marginal costing. First, we discussed marginal cost, that is the cost of producing one additional unit. Thereafter, we discussed variable cost, the cost that varies according to production. Further, we discussed fixed cost, the cost that remain fixed irrespective of production. Thereafter, we discussed the master chart, that is sales minus variable cost will be contribution. Contribution minus fixed cost will be what? Profit. Thereafter, we discussed few concepts. Yes, B break even point and break even sales are same. Depreciation is always a fixed cost, my dear. But let's say if the useful life is in the form of machine hours, let's say a particular machine is having a limited life of 10,000 hours, then we can say depreciation, we can say it is a variable cost. But in most of the cases, it will be fixed cost only. But if the machinery, again, there is a limited useful life of machinery, let's say not in years, let's say in hours. Let's say the life is given in hours, 10,000 hours. Now, in this year, if we are using 3,000 hours, then it is called as variable cost. But if the useful life is given in number of years, fixed cost. So I repeat again, for all the fixed asset, if the useful life is given in years, then it is a fixed cost. If the useful life is given in machine hours or whatever it is, then it will be variable. Don't worry, my good wishes are with you. Whatever the support you need from my side, Srinivas, I'm there for you till the last date of exams. Whatever the queries you have, you can write a mail to ICAI. We'll surely address and respond to all your queries. Rest, have some patience, practice. Practice is the key. Refresh your concepts. What I can figure out is that you're not still thorough with the concept, but yes, do try to refresh your concepts. Do solve as many as possible questions as you can. Don't worry, you will surely crack the exams. That's okay. Hardik, don't worry, I'll be putting up many questions in the coming session. So let's sum up what we have discussed. So first formula, what we discussed was PV ratio. That is contribution divided by sales into 100. Second one was break even sales. If you want to calculate in units, it is fixed cost divided by contribution per unit. If you want to calculate in rupees, it is fixed cost divided by PV. Thereafter, we discussed desired sales. If you want to calculate in units, fixed cost plus my desired profit divided by contribution per unit. If you want to calculate in rupees, it is fixed cost plus my desired profit divided by PV ratio. Thereafter, we discussed margin of safety. Actual sales minus break-even sales. Or we can say it is profit divided by PV ratio. If in units, it is profit divided by contribution. So this is the summary of what we have discussed till now. If you guys have any doubts in this part, you guys can please post. In the meanwhile, those who want to copy this master chart, giving you 2 to 3 minutes time to copy this master chart. And then we will conclude the session, and then we'll start with the practical questions, few practical questions in the coming sessions. So guys, thank you so much for your time and patience. Do revise what I have discussed in today's class. Further, there are many students who have not solved questions on standard costing. I request you guys, do solve all the questions of standard costing. Further, do revise marginal costing, what I have discussed in today's session. I am having, I think, one session day after tomorrow. So I'll be today is, I think, Tuesday. Yes. So I'm having a session day after tomorrow. So I'll be discussing few practical questions and few more concepts on marginal costing. So be prepared for the coming session. Do revise what I have discussed. Till then, take care of yourself. Merry Christmas in advance. God bless you guys. Yes, sir. Over.